Welcome back to my channel. My name is Yomi Kukoi. Let's talk about benefits in kind. No, not that benefits in kind. No, we're talking about taxation. We're talking about personal income tax. We're talking about how you're going to derive the taxes that are payable. Now, so let me just tell you a story of Bayo. Bayo has been doing very well. So when the Bayo arrives in the office and the boss calls him, I say, Bayo, going forward today, we've already arranged an apartment for you in Victoria Island, Lagos. That's where you'll be staying. That is on the company's bills. And FRS is thinking, that looks like income. If buyer is moving to Victoria Island, maybe we should tax it at 20% of his gross income. And then the boss has not finished. The boss calls Bayo again. So Bayo, look through the window. See that Prado out there? It's for you. That's what you'll be using going forward as long as you remain in our employment. And the tax people are saying, that too looks like income. Maybe we should tax that at 5% also. Buyer gets back to his office and then he told him that, you know what, we've already paid for club membership at Ikoyi Club for you. We've already paid health insurance for you. This is all the things that you need to have. And FRS is thinking again, all this looks like income. All this looks like income. Maybe we should charge him everything, charge taxes on to what the company is paying. And then every day buyer gets to the office, lunch everywhere. Lunch, jollof rice, fried rice, bokoto, everything. And the tax people are looking, this looks like income. And somebody now say, you know what? If it looks like income, if it acts like income, if it works like income, maybe it's income. If it's income, we're going to tax it. That is the story of benefits in kind. Section 14 of the Nigerian Tax Act states that benefits in kind needs to be taxed as follows. Number one is rent. The Act says that if there is a company provided accommodation to an employee, regardless of the cost of the accommodation, what the Act says now is that the tax people are going to assume a 20% portion of his gross income, which is going to now be assumed to be cash paid to the employee. So somebody were to earn 10 million naira per annum and is living in a company provided accommodation, then the Act says that 20% of his total gross emolument, which is now 2 million naira, will be added back to the 10 million. It will now be assumed to be earning 12 million naira, and which is now going to be computed as part in deriving or in arriving at the taxes payable and all the reliefs that are not going to be offset against that. So 20% of your gross income is going to be assumed to be rent paid. That's benefit in kind for you. That's the number one. Secondly, if the company provides you any assets, something like a company car, like Bayo in this case is riding a Prado, what the Act says is that the tax people are going to assume 5% of the cost of acquisition of that asset, which will now be assumed to be a benefit in kind, which will now be added to the taxable cash paid, and then the tax due will now be computed on that basis as well. So 5% of any asset like car and stuff like that, or tools, any other tools, which will now be used to compute your tax. That's number two. Then number three, if the company is paying any utilities like club membership, health insurance, lunch, all those things, they're hiring any asset, something for you to use, that particular cost to the company is going to be assumed in full as additional benefit in kind. This is going to be added to your total emolument in arriving at the tax that is paid. So what this section is telling us is that everything that looks like income, which you're benefiting, something that you will have otherwise used your own income to go and purchase, but which the company or the employer is providing for you, will now be added back to your income in arriving at your total taxable pay. I hope this is clear. So going forward, employers and employees need to go back and check how they are arriving at tax being paid to or employees, the return that they are making, so that you don't run the risk of under declaring. Because now the tax authorities have put in place very, very robust audit measures to ensure that everybody is paying their fair share. I'm not advocating for the tax bill. I'm just sharing information in order to help us comply better so that we don't get into trouble. If you would like to watch the full version of this video in terms of all personal income tax matters, there's a full version on YouTube. You can subscribe to our channel or click on the link on my bio. My name is Yomi Kukori. I'll see you on my next video.